Greetings again, students. We're now at tutorial sheet 7, question 7. The Nadar Company's next expected dividend D1 is $2.65. Its growth rate is 5% and the stock now sells for $40. New stock can be sold to net the firm $36.20 per share. What is Nadar's cost of retained earnings? What is Nadar's percentage flotation cost? And what is Nadar's cost of new common stock? We now turn over to Akila Aikens, Tony and Dyer, and Monique Edward to take us through this solution.
All right, good night, everyone. We are looking at tutorial sheet 7, question 7, and the question reads, the Nadar Company's next expected dividend, which is D1, is $2.65. Its growth rate is 5%, and the new stock now sells for $40. New stock can be sold to net the firm at $36.20 per share. Now, we have three sub-questions to the question, which states, what is Nadar's cost of retained earnings, KS? What is Nadar's percentage flotation cost, which is F? And what is Nadar's cost of common stock, which is KE? Our group consists of Akila Atkins, Tony and Dyer, and myself, Edward. I will now turn over to Akila Atkins.
Okay, thank you, Monique. So part A to the question asks, what is Nadar's cost of retained earnings, which is KS? So the formula for KS is D1 divided by the price plus the growth rate. D1 is $2.65, the price is $40, and the growth rate is 5%. So I now substitute in the formula. So $2.65 divided by the $40 equals 0.06625 plus the 5%, which is the growth rate. That is equal to 0.11625, or we can say 11.63%. I will now hand over to Tony Ann.
Okay, so I'm Tony and Dyer, and I would be doing part B to the question. Flotation costs are costs a company incurs when it issues new stocks. So the formula for flotation cost is equal to PO minus net sale divided by PO. F equal to $40, which is PO. That means the price at which the stock now sells minus the 36.20, which is the net sale that was given in the question. F is now equal to 3.80 divided by $40 times 100. So the new flotation cost is now equal to 9.5%. We'll now hand over to Monique Edwards, who will be doing part C.
Okay, firstly, I must say common stock is basically the shares of ownership within a corporation and the type of stock in which we choose to invest in. Firstly, I use the formula KE equal D1 divided by PO, open bracket 1 minus F, close bracket plus G. KE now equals to $2.65, which is D1, divided by the $40, open bracket 1 minus 0.095, close bracket, plus the 5%. The 0.095, which is the new cost of equity, we have to take it out. And then we have KE equals 12.32% or 0.1232. Thank you very much and have a good evening.
Thank you, team. We're now going to hand over to another group, Javon Bourne, Gina Gray, and Brittany Banks, who will take us through their take on the solution.
Good night. This is tutorial sheet 7, question 7, and my name is Javon Bourne, and I'll be doing this question for my partners, Janelle Gray and Brittany Banks. The Nadar Company next expected dividend D1 is $2.65. Its growth rate is 5%, and the stock now sells for $40. New stock can be sold in the net firm for $36.20 per share. What is Nadar's cost of retained earnings? The dividend using the dividend growth model formula, which is the dividend over the share price plus the growth rate. You just plug in the numbers in the question into the equation. Dividend, which is $2.65, divided by the stock price, which is $40, plus the growth rate, which is 5%. After that, the answer you get is 0.06625 plus 0.05. The final answer is 11.62%.
I am Janelle Gray and I will be doing part B. What is NADAR's percentage flotation cost? To find the flotation cost, you would have the selling price of the stock minus the new stock, the price of the new stock, divided by the selling price of the stock, which is the selling price of the stock is 40 minus the net sold, which is 36.20 divided by 40. Then you're going to get 3.8 divided by 40. This will result in a percentage of 9.5.
Good day, everyone. My name is Brittany Ebanks. What is NADAR's cost of new stock KE? So we'll be using the cost of ordinary shares formula, which is KE equal the dividend D1 over P0 bracket 1 minus F close bracket plus G. So using the numbers in the equation, we'd say 2.65 divided by 40 open bracket 1 minus 0.095 close bracket plus 0.05, which will give us our end result of 12.32%. Thank you.
All right, thank you, team. So we go to our final group, which is Sandrine Smith, Ashley Francis, and Nordia Reed. So guys, take it away.
Good evening, everyone, or good evening, sir. We're doing tutorial 7, question 7. The presenters for this question are Sandrine Smith, Ashley Francis, and Nordia Reed. Question states, the Nadar Company's next expected dividend, D1, is $2.65. Its growth rate is 5%, and the stock now sells for $40. New stock can be sold to the firm for $36.20 per share. A says that what is Nadar's cost of retained earnings? B, what is Nadar's percentage flotation cost? And C, what is Nadar's cost of new common stock?
Okay, good day, sir. So the formula for cost of retained earnings is D1 divided by P0 plus G. And that would be 2.65 divided by 40 plus 0.05, which would lead to 0.06625 plus 0.05, which would give a final answer of 0.11625 or 11.63%.
So I'll be looking at Nadar's percentage floating cost. So flotation cost is equal to the stock now minus the new stock sold divided by the stock now. So that is 40 minus 36.20 divided by 40. And you'll get 3.80 divided by 40, which is equal to 9.5%.
Okay, so the cost of new stock would be equal to the dividend divided by the price times 1 minus the flotation cost plus the growth. And in the previous question, you found the flotation cost, so we'll just plug it into the formula. So that will be equal to 2.65 divided by 40 times 1 minus the 0.095, which would be the flotation cost plus the growth 0.05. So it would be equal to 2.65 divided by 36.2 plus 0.05, and then we get 0.0732 plus 0.05. That answer would be equal to 0.1232, or in this case, 12.32%. That is the cost of the new stock.
Okay, thank you guys. So now I'm just going to give quickly my take on the question. So you'd have gotten the answers already, but just here goes. So we already got that the next dividend, D1, is 265. Growth rate 5%. The price of common stock now is $40. And the price if we sell some new, the net price if we sell some new common stock is $36.20. First thing, part A, what is Nadar's cost of retained earnings? KS. So for KS, there's no flotation cost. So we're going to take it through. D1 over regular formula, D1 over P0 plus G. So just drop in the figures and we get 11.63%. For the second part, what is Nadar's percentage flotation cost? So if the original price is $40 and the net price if we sell new stock is $36.20, then the difference would be the flotation cost. So 40 minus $36.20 is $33.80. So as a percentage now, what percentage is that of the price, which is $40? So 380 divided by 40 is 0.095 or 9.5%. So flotation cost is 9.5% of the stock price. And finally, part C. What is Nadar's cost of new common stock? So here we just use the adjusted formula, D1 over the net price plus G. So drop in the figures, and here we get 12.32%. All right. All the best, guys. Keep pushing, keep working hard. Your exam is right around the corner. Looking for only the best. Take care, and we'll talk again soon.